So we're pretty much back with another one. We're gonna go over what trade we took, how you could have done the same, and also how you can take advantage of future opportunities like this. Um, that's pretty much two main points repeated in themselves, just in different ways to make you feel like you should be more engaged in this video. You should. So let's get into it. Uh, in essence, we took a trade on gold today. So what we saw coming into the morning is very simple stuff here. Actually, no, it's not. It's slightly advanced. Uh, the daily was bearish. We did mitigate this fair value gap right here, right? We reacted off of it and we did break 4 hour structure. But obviously, coming into New York Open, 4 hour candle closes at 9 a.m. That means that we have 1 hour starting 8 a.m. to actually do something and predict how this candle is going to close because that will pretty much decide how the rest of the day goes, right? So, this 4 hour candle at the time of trading had not yet closed. What did we notice? We noticed that we had a massive hourly run up right here. This would likely entice many people to keep on going long. So what I'm thinking here is this is the order block that started this massive move, and we're likely going to get a reaction off of it, which we already did in late London. So moving forward, what did I expect? I said, okay, I would like to see lower time frame invalidations of what? Of previous made PDRAs so that I can decide to go short or in the opposing direction, that I can at the very least target all of the longs that have been piling up since London session, meaning people who have their stops here, people who have their stops here, people who have their stops here. All of these take profits, and this is the Asian low, which did not get taken either way. So that's another reason as to why, because okay, we may have some reasoning to come back down. So what did I do? I said this is going to be a lower time frame based trade, so I really need to be extremely careful here. I really need to play the right invalidations, right? So what do we play? 5 minute break of structure, break of structure. This was the order block that caused this break of structure, this massive run, right? We also have this fair value gap right here. So what do I notice? Right into open, we get a green candle off of this fair value gap. Whoever thought this was a confluence got stopped out with what? This break of structure right here. Into what? This order block. So I'm thinking, okay, if this thing was supposed to go long, this would be the first inducement to get people in, people at market open who are just excited to trade, fiending, whatever. And then you had this fake out, right? But the only thing that made this fake out invalid for me was very simple. The invalidation of the fair value gap. If we had an order block tap and then a reaction back all the way up into the fair value gap range, I would say okay. But no, what did we get? We got a 5 minute break of structure. Off of which what happened? All the longs that were enticed were given what? A fake break of structure. Look into the details. This the sauce is inside the details. What did I observe? I said, okay, look, this 5 minute candle did not break structure here. This was liquidity that was induced, right? So let's get into the nitty gritty details here. So now we see that this was a fake break of structure right here to induce people. Because this candle closed last minute, like very last minute. It just closed just under 2. So what do we do now? We say, okay, let's play the invalidation of what? Internal bullish PDRAs so that we can target sell side, right? So what do we see here? I see this fair value gap that gets inversed. Awesome. Confluence number 1 in terms of internal stuff. Second confluence. I see this get retested. The invalidation of this fair value gap reacts off of it. And then we break structure into it. That's where I said, cool, I am good to go short on this. Now, I put my stops under that and long and what? Target the first drawn liquidity, which is these relative equal lows. So what happens? Price comes all the way into them at New York Open, takes them out, and just chops around for the rest of the day. So how could you have done this? Knowing one, that price doesn't just expand all day long, it retraces too. Two, you also have to know that price, when doing that, has to make all sides lose. So all buyers here stopped out. All short sellers who did sell early also stopped out. More buyers induced. It's everyone losing. You have to see where the truth lies within all the bullshit. So yeah, join the Discord. This was given to them. We did make money this week. In fact, we won 3 times, lost 3 times, yet still made 5R profit. That's because of positive risk to reward ratios. So I'll see you guys in the next one, and best of luck.